I hope you guys have been playing MU with us because it's been doing amazing. MU is a ticker we've been tracking for a very long time, both up and down. As you can see, in the year 2000, 1999, pause. Year 1999, okay, posted on the 16th, got it. There was a resistance here in the year 1999-2000 where the stock proceeded to lose 93% of its value. Now, things like this, opportunities like this, don't come across every day. They don't come across every year. They don't come across every decade. But at least in the Discord, we were identifying this resistance. And so far, it's been proving strong. And if you would have been shorting, entering in about February through April, anywhere in that time, anywhere between February, literally right there, you would be up 22% with the potential of 70 plus percent, we'll say, to the downside. Fantastic, absolutely fantastic. The only point of contention that I would probably foresee would be this blue line right here, which is your weekly. Is that weekly or monthly? Weekly. Daily. Okay, so this blue line would be your only main point of contention. Once it touches that blue line, it will either slice right through it like butter, or it will bounce up a little bit. As you can see in our year 2000 example, butter. But that doesn't mean it's going to be the case this time. Most likely will be, though. Let's look at the monthly. It really was just a great opportunity for a short for bears, if you roll with the bears at all. This was a fantastic opportunity. We're also, let's take a less technical approach. Let's take a more abstract, a more fundamental approach. Let's look at their financials. Now, tech in general, especially hardware, especially components like CPUs, memory, chipsets, anything of that nature, they really don't make the biggest profit margins. It just is that way. That being said, in 2017, this company had a profit margin of 25%, very respectable. In 2018, they had a profit margin of 46%. Now, that's quite unbelievable for a company of this nature. But that high, as you could even say, was short-lived, where it proceeded to go back down to 26%. And then in the year of 2020, when everyone's working from home, they managed to punch in 12.5%. 12.5%. There's obviously some drop-off happening here. Half of 50 is 25. Their profit margin got cut in half. Half of 25, 12. It got cut in half again. These are really bad fundamentals. Not things you want to see on your financial statements. No bueno. As you can see over here for earnings, their next earnings report, September 29th. Yes. 9 days. Yep, that would be correct. Also, their dividend day. In 9 days, there's going to be a dividend, 0.5%, not much, but keep that in mind. and they're going to have their earnings. But mainly what I was going to say is this gray dot represents the analyst expectation. Now, usually I never refer to the analyst expectation because their expectation means no more than you or I sitting here saying, I think MU is going to report this. I think MU is going to report this. That's a whole separate issue. But typically when you see these analyst expectations that are abnormally high, as this one is, that would be because they want the company to miss in a way. You can see a lot of examples of this. I'll try and show you if and when we stumble upon another here. But the higher they raise that expectation, the harder it is for a company like MU to actually meet that expectation. Let's look at another one. I got one. Keeping the bearish moves in mind.